many analysts, they kind of look at the stock price and they believe that the stock price is an accurate measure. In fact, some of them think it's the most accurate. The market tells you what the real valuation is. The buyers and sellers, they determine what it is. And so I've been hearing people saying today, oh, the PE ratio is 50 today. That's accurate. That is fairly valued, the car. But no one's valuation people are not going, look forward. Look at where we are today with 4 factories, all almost at scale. You've got the bot company, you got the energy company, you got the AI company. I mean, you were talking about look at the future back then, which is almost all EVs. Now it's like EVs plus everything, and yet the PE is at 50. What is your how do you I'm not trying to give you investment advice, but as a stock analyst at that time, how would you view Tesla today? What would you be saying today?
Well, the questions I would be asking are, because I'm not following it day to day, and I own it,
Yeah.
by the way. It's my
Yeah.
second largest position outside of my current company. And I own a Tesla as well. So yay. The question I would be asking myself is, do you think growth estimates are going to come up from here? Meaning, is the street not fully valuing where the growth is going to come from, or is it priced in? Now, I will say earnings and cash flow matter more today than it did in 2013. It's just the nature of
Mm.
the macro environment that we're sitting in. So earnings and cash flow do matter. However, that PE multiple has come down, right, from back then. So the question is the growth that the street is expecting, do you believe there's meaningful upside to what Tesla can do? Or put another way, is there a gap between expectations and what you think will be future reality? And if you think so, then the stock would outperform. If you think expectations and what will actually happen are kind of well matched, then the stock will just grow in line with the company's growth, right? And then if there's the delta is to the downside, meaning like expectations are like sky high and it's priced to perfection, and you think Tesla might stumble a little bit or not grow as fast, then the stock would come down. There would be a re-rating downward. So I think those are the three questions I would put back to you as the current expert. And I would say, sitting in your seat, you're more of an expert on Tesla today than I am today. So I would actually put that back to you.
No, I'm gonna throw it back at you. You're uh yeah, I think everybody in this channel knows that I'm a Tesla bull. I'm a measured Tesla bull, but I also have interviewed so many people. I've interviewed 4 people on Tesla Bot, and folks are still thinking this is so far ahead, when a far away, when actually it's really close for them to use it in the factories for very special purpose utility, and not needing to, we're not talking a consumer bot or all that. Energy, there's going to be Now Prices Energy company. Uh, what do you think about that? So I don't know if you knew, but they announced the last Investors Day. They announced that by Q3, Q4, they're going to start reporting on energy alongside the car deliveries and production. So at that point, right? How do you, how do the institutional investors, how does the Wall Street analyst, how would they look at it now that it's being reported? So it's no, you can't say that this is a car company anymore by that point, right? Or is it as big a deal as some of us think, or is it kind of like a minor blip?
You're saying they're going to start reporting out in terms of like what megawatt
Energy,
hours?
mega pack sales, delivery, and production.
That's an interesting question. I mean, you definitely wouldn't want to trade like utility. I think, I don't know. Did they say why they're going to report it out?
Well, I think that it's a meaningful business. They built Lathrop Megapack factory last year. Took them less than about a year, and it's on scale. By the end of this year, it will be in scale production. 10,000 megapacks per year. And then there's some estimates that they're going to get to $2 billion of profit by this year, while most Wall Street are still thinking it's going to be $2 billion of profit by 2025. I'm not sure what's going to happen there, but it's going to be, it's basically some meaningful numbers now by the end of this year, and so I think
Are
they're
they
ready to start reporting them.
are they in peaker plants right now? Because I know that was part of the bull case in the past, is
Are
that they
are they in
would
what?
in peaker plants. Like, are they
Oh yes.
offsetting?
Oh
Okay,
gosh, yeah. This is
in
the
multiple.
most untold story in the world. They've been signing contracts left, right, and center, not only in peaker plants, not only in countries all around the world. There's been signing these hundreds of millions of dollar projects, but they've been signing hundreds of millions of dollars of projects with corporations. So Apple Corp themselves are spending 200, $300 million to Tesla to do solar panels and megapacks to be able to power their headquarters, the big circular headquarters in Silicon Valley. And more of these are being signed. People are just ignoring it, but it's happening.
It's very exciting. It's very
Yeah,
exciting because it will change how humans live. Um, I
exactly.
mean, it will, right? The ability to store energy is, I mean, it is one of the biggest technology gaps that faces humanity today is the inability to meaningfully store energy in large volumes,
Yeah.
right? And so what happens is you have to match supply with demand, which is why you have rolling blackouts. And I think with, climate change and you get these extreme weather events and then all the air conditioners have to come on at once and stuff like
Yeah,
that.
exactly.
If you can store energy, it solves a huge human problem. So that actually is very exciting. And I'm not surprised they're reporting it out. That is very exciting. Good. I'm looking forward to living in a society where we have massive energy storage.
Yeah. Well, so what does it take for a company, in this case Tesla? What does it take for the investors to realize to value it properly, not just as a car company? I think the story and the narrative is changing, but what will it take? I mean, are you on the side of if you're when you're on the analyst side where you're going, well, I won't be counting robo-taxi until I actually see real revenue on a line item and I can, you know, afford this out for the next 5 years. But if there's no line item for it at this point, you're not making any revenue from it. No one want to talk about it at this point. Is that how, you know, investors kind of value a company?
So investors don't invest in a vacuum, which you know. So when you have capital and you have to put your capital to work and you have to put your capital to work in places where you think it will work and it will grow for you. The cost of investing in anything speculative has come up, particularly when interest rates are up, right? You just go buy treasuries and you can get a nice
Right.
return on that. I mean, you can get conservatively 5 to 7% on your money
Yeah.
just by putting it in things that are very low risk at all. And so if you don't have to incur very much risk to get those kinds of returns, the return has to be that much greater to go after something risky. I think that is the umbrella framework and the current macro environment that we're sitting with.
Yeah.
And I think there's a lot of like, oh, Elon is tied up with Twitter and this is what's affecting the stock and all that. I actually think the macro is probably a
Yeah.
bigger contributor to the current stock price action. And I'm just looking at the chart here. I mean, it also had this massive run up in 2021 and it's starting to recover some of that. But I think that's probably the bigger contributor. So when you talk about like robots or something like that, if I'm an asset manager, I have to go, all right, cool. But I need to actually chase like real earnings today or real cash flow
Okay.
today. And so I can maybe put some of my capital towards speculative capital, but I don't have to because of interest rates being where they are. That is generally how I think that most of the investor base, I would say like sort of like the sophisticated institutional investors are thinking about it. Now, as individuals, we can have a different calculus, right? We don't have to follow all these formulas or whatever. We get to invest our own money however we want, right? And so it's kind of nice. You're like, okay, I'm just going to, I call it the coffee can, right? Coffee can this thing, just buy the stock, put it in the coffee can, bury it in the backyard, go back sometimes and look at your coffee can. You're like, ooh, it's up, and then when it's down, you just leave it buried for a while, right? That is a fine for an individual investing strategy. I would say institutions don't get to do that.
Gotcha. Yeah. Yeah.
But yeah.
Well, do you think that we, as investors, are paying too much attention, or just thinking that it matters that institutional investors get in? At one point, a couple of years ago, I think it was like 70% retail, 30% institutional. I think the numbers are now flipped. That's 50-50. Does it matter that institutionals come into the stock?
I mean, I think you do want institutions in the stock, or I think sometimes the retail, gosh, so are you saying that Tesla has 30% retail ownership?
At this point, it's probably higher than that at this
That's
point. No,
amazing.
in the past, it used to be 60-70% retail, and now it's flipped. Now there's more and more institutions are coming in. It's 50-50 or something like that at this
It
point.
depends on the amount of capital available. I do think that retail matters more than it ever has, or at least in the last few years, that retail really matters and you have to have a retail strategy. And I can see where retail has carried Tesla. In terms of whether it matters, yeah, absolutely it matters. I think, though, in order to have more meaningful share price appreciation from here, you do have to get more of the institutional ownership. But I don't think the stock is doing quite well. I'm just looking at, like, it's going to hit a resistance here at 249, it looks like. But once it crosses that, the 100-day, it will be above all three moving averages. So, you know, the 200-day moving average is 185, the 50-day moving average is 209, and then you have a 100-day of 250, and it looks like it's about to pop up above that. And so, you know, once you've got that, stock's doing pretty well. I mean, I don't think it's doing poorly at all. I mean, it's down off the all-time highs, but I think that the late 2021, you know, that the asset price inflation we saw in 2021 was not real, right? That was macro driven as well. And also you had like COVID and everybody was stuck at home. And so stock trading became like a hobby. But I think the stock's actually doing quite well. And it's really recovered nicely off the lows, 120 something in last December. Yeah. So I think actually the stock's doing pretty well. Wouldn't you say?
Oh yeah, no, it's gone well, but I think it's still undervalued. That's my personal opinion. That, you know, I've been saying that if the stock fell from 300 to 100, why do people think that it can't rise from 100 to 300 just as quickly or same time frame? Now they're going, oh, you know, we're at 200 and 250 to whatever. It's going to take us another year, 2 years to get there. Now it's all, like you said, it's macro. The macro has a turn. This is a growth stock. It's a narrative stock, a story stock. And so if that doesn't change, no amount of good news from Tesla budget makes the stock budge, as we witnessed in 2022. But everything's happening. The fundamentals are chasing it. So
I'd also add to you, though, Herbert, like, even a fairly valued stock, if the company is growing very quickly, will outperform, right? And so I think that there's something to be said for, if Tesla's going to continue growing, it's absolutely like something like, for me, like I would want to have access to, like, or I want to have exposure to in my portfolio. Like, that's so exciting. So, you know, especially if something is hugely disruptive, if it's part of future trend, like these near-term movements, like, you know, in a decade, you'll look back and you'll be like, yeah, I'm so glad I had, you know, exposure to the company that was bringing energy storage to the masses. Like, yeah, that makes sense. That's a pretty secular trend, you know, that you want exposure to. Not investment advice, but just, you know, on a personal basis. Like, if you can afford that and you don't need the money in the near term, you can kind of just ride through some of the ups and downs. I mean, that's what my strategy has been. That's nice. That's great. I love it.